Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, January 5th, 2022. It is a little after 10 o'clock Eastern Time as I'm starting the video. Wanted to wait till the market started trading to get this one out. What I'm going to do is go over the short-term outlook for the Nasdaq 100 and some of the top components. This one will be a lot shorter than yesterday's video. That one was pretty extensive, covering a lot of charts and various time frames. All we're going to do in this one is look at the QQQ, the Nasdaq 100 futures, NQ, and then we'll go through, I'd say, not even less than a dozen, probably about the top 7 or 8 holdings, maybe the top 10 holdings in the Nasdaq 100, just to give you an idea. And most importantly, give you some levels to watch that will most likely trigger, we can call them additional sell signals if you want, or the next leg down. We already have sell signals. We had them recently, and let me just dive into the charts and we'll go over those levels. All right, so this is a daily chart. This one's a lot of lines. I'm not crazy about the way this chart looks as far as how clear it is to, but the levels I'm watching would be that uptrend line right there, and I have these lines color coded. These same levels that I had I was highlighting before we even went into the Christmas vacation or slow period towards the end of the year. And I'm still looking for a break. I need to see this level go right here, really this yellow line, about 377.64 is where I have it. That's the bottom of this recent trading range. Remember, QQQ broke out here. That was a breakout above the previous high. We came in and back tested, and those back tests had some intraday drops a little bit below that right there and there, and so that's where that line is. So you want to round down to be safe, call it 377, set a price alert, maybe 377.50. I think that'll do the trick, and if it's taken out, it'll also have taken out the uptrend line I just showed you right here. So that's the level, and remember, nothing's really changed in the last couple weeks. We put in a divergent high back here that proved so far to be the high in QQQ, and I believe it has the potential to be a very significant top. That was back in November, and unlike the S&P 500, the Qs didn't have the juice to go on and take out that previous high. Effectively, they put in, it was slightly lower, but for all intents and purposes, we'll call that an equal high, and all that did is extend the divergence there. Just like on SPY, the marginal new high simply extended the negative divergence. So I'm still expecting more downside to come. And again, I'm going to go over levels that you can set price alerts on. You can trade some of these individual stocks if you don't want to trade the Qs. But let's jump down to the 60-minute chart. Okay, these lines have not been touched or modified since before Christmas. So we had the same levels. I told you that really was about the upper end of where I wanted to see the rally go if it got there, and we did. I mean, we took it out by the slightest margin, and that was just thick in the middle of the holiday season when trading volumes plummet. You can see there's virtually no volume, and so you take that with a giant grain of salt, or big lump of salt. Is really what you ought to take it. So that's, again, breakouts like that mean next to nothing when they occur on especially on that week, the week of between Christmas and New Year's, or leading up to Christmas and then up to New Year's. So that's it. So basically, we got rejected again at the 401 level. Again, meaning, we had a false breakout right here. This is just kind of a recap for those of you catching up. That gave us additional sell signal number 2. We had our first sell signal back here. Sell signal number 2. And then just a WWE smackdown in the Qs. Every time it tried to get to that level, you can see even until recently, it smacked down. So call it what you want. You're bullish. You want to see that level get taken out, and get taken out with conviction, ideally on volume, a solid daily close, and better to see 2 or 3 daily closes above it. That's what you want to see. Unless that happens, I'm still looking for substantial downside. Now, here's the thing. I'll be extending my price targets. Remember, the price targets, we already hit T1 and T2, and that was from these 2 sell signals back here. And I'll still maintain T3, T4, and T5. And if those are hit, if this starts to play out and we come down and hit my 5th target, things will have firmed up. The bearish case will have firmed up even more so on those longer term charts that I covered yesterday on the weekly and monthlies, and therefore I'll probably add additional targets. So first things first, look, a lot of work to do. Please understand that we are just, again, spitting distance from all-time highs in the Nasdaq 100. Just recently put them in the S&P 500. So to sit here and talk this bearish talk and these targets, it's where I think we're going. I think the odds favor it. Told you that before. But it's hard to say it with the utmost conviction when, again, the trend overall, primary trend is bullish, and you're within, spitting distance to those highs. So again, the point of this video is going to show you which levels will increase the odds, will increase my confidence that we're going to come all the way down here and maybe then some down to that fifth target there at about 352. Okay, so first is this 393. Again, that level, I've had it on here for weeks, if not months. We hit it yesterday, so if you're an active trader, I pointed out the sell signal before the new year back here, right on the 27th or 28th. We broke that level, and that was a sell signal. We also had that bearish PPO crossover right there, high level bearish PPO crossover, just like we had one there. You can see what happened after that, and so far that's been good for if you took that short. Down to that, which would be and was and still is first target 393. That was good for 2.5% drop. If you're an active trader, then you're in and out. You take even just a single contract of NQ, and that put several thousands of dollars in your pocket right there. Of course, you don't have to take NQ. It all depends on your portfolio size and your experience. If you trade QQQ, whatever, you do the math and determine how much you want to put, how much capital you want to put at risk on a trade. And everything should be about risk reward. If you're looking at, had you shorted that and you were going for just a pullback to that 393 target, well, that's your downside, your profit target. So your stop would be somewhere maybe about a third of the way up from there. If you're going for T5 or more, you can certainly allow for the Qs to take out that previous high, and simply, again, all that's going to do on this daily time frame, and it's guaranteed if it happens anytime soon, is to extend these divergences that were in place at that last high right there, negative divergence. If you draw a line like this, price goes up a little, makes a marginal new high anytime soon. Here right now, we recently have divergence at that most recent high, or close enough if it was an equal high. And then should we go up a little bit like this? See that? Anytime soon. Now if we keep going up a lot more, yeah, we could burn through that divergence. But again, I don't think it's going to happen. And the easy thing is, look, I'm going to be right or wrong. And it's all about just scaling out of short positions if and when we start to take out these divergences. We start to do anything more than just a marginal new high. Again, it depends on what you're swinging for. Alrighty, back to the levels. So let's keep it very simple. That 393 level needs to go with conviction. We had a little intra-period pop right there. We're back above it now. That's going to open the door to more downside if it's taken out. And I think, gosh, I've been thinking it for a while. I mean, we've had some impulsive downs, but I think we'll start to snowball down. Fed's going to come out with their minutes from the last meeting today. I think that's released at 2 p.m. That could be a catalyst. And well, anything can be. So let's go into the individual stocks now, and then we'll wrap this video up. Oh no, before I do that, let's go to the NQs, the Nasdaq 100 futures. Okay, again, same levels that we had covered before we went into vacation or over the holidays. We had that uptrend line, as I mentioned before. We had negative divergence, gave us a little wedge there at the top, and that was our most recent sell signal in the NQs. Then, as I said we need to do, we did. We took out that 16,442. After that, we danced on it for a few days, took it out, and tried to regain it, couldn't, and we fell to that same target that was laid out in advance, 16,129 right there. We hit it yesterday right there at the lows. Gave you a chance to cover shorts, even gave a bounce, but the bounce didn't go very far, and we're testing it again. We're still above it for now We're at 16,176. I have that level at 16,129, and again, we need to take that out. I suspect we will. So that's the level that you want to see if you're looking to add to shorts. Any bounce at this point in time should be contained. That level's been traded through a little bit, so it's not as firm as it was back then. I have it at 16,442. This is right here. Let me give you a level that really should contain any bounce. I don't think we're going to go that high. If we do, it gives you an objective short entry if you get all the way back there, and that's at 16,567. You have 1, 2, 3 reactions, 4 reactions right there on that level recently, and again, that would should act as resistance. Anything, if we pop it, even though there's a previous high right there, we'll probably then put in that marginal new high. Again, I don't think that's going to happen. If you're waiting for that short entry, you're probably not going to get it. I think we're going to go ahead and take this out and then start to move lower. A near-term target, if that level, if this recent lows right here from today are taken out, I'd stay down here to about that 15,553. We've already hit it a couple times. It's a pretty significant level right there. A lot of eyes are going to be on that level. Buyers, who knows, we'll probably step in unless we just get that waterfall type selling that I've been talking about. So far, it's just been a battleground between bulls and bears for months now, just chopping around in this range. Oh, and so of course, if and when we take that out, we take out those lows with conviction, that's going to be quite bearish, because again, you got to look at bigger picture. Jump back, and here's that box I have. That's that box right here, you know, sideways trading range in the Qs since that breakout. So if we move back down and we take the bottom of that range, it tells us that the breakout of this previous high has then now failed. That's a false breakout, aka bull trap, and that's pretty bearish, and that should send us down pretty hard. And again, it's these divergences that tell me that is a quite possible scenario, a likely scenario, despite the fact we're in a strong, resilient bull trend and near all-time highs. So call it what you want, call it a contrarian call. It's just the way I see things right now. That's the most likely scenario. Now we roll into the individual components and the levels that we need to see go. So Apple, you have a near-term uptrend line. That near-term uptrend line comes off the November 12th lows. Definitely would set a price alert on that, or at least watch that level, because I think if and when that goes, and I think it'll go, that's going to take the largest component of the Nasdaq 100 and S&P 500 down. Where to? At least I think down about right here. This trend line I just extended, you have a lot of support in that area there. The support zone runs from about 130 and change up to about almost 145. That would take Apple down, let's say about 20%, and that would be a pretty big drop. I'll give you one more target. It's not going to go straight to 20% without the dip buyers coming in for sure. I think this would be a initial. You want the initial target where the first reaction be. It's going to be right there about 167.50 and then 157.30, and then ultimately. So that's, I think, how something along these lines for Apple. Get down there and then hit that trend line, and so that'd be a pretty good drop. Remember, that's what I say, about almost 20%, close to it. It's going to have a big impact on the market if that happens. So again, there's the level. Set an alert, and if you look at it on a 60-minute chart, let me clean that line up just a little bit there. Tighten it up right here. There's your line. Nice, clean, bearish rising wedge pattern. See this divergence we had in place? Continues to build. So you have a clean uptrend line on the 60-minute chart, which to trigger a short entry on Apple, sell signal. And I'd say something like that. There's that 157 right there, and that would be, again, this is just a 60-minute chart, but there'd be a drop if we get down to 157, about 12%, and then ultimately down here about that 151-ish level right there. So there's Apple, key level to watch, key stock that will certainly have an impact if we get that sell signal. Microsoft, level to watch here. You've got a trend line coming off the COVID lows, I call it, back in March of 2020. If you take that trend line, it comes in, you have a reaction here, back in May or so of last year, and right here in October, and we've been dancing on it now. Why do I think that? Here's what you can do when you see a trend line. You can buy pullbacks to the trend line. That's what TA 101 says to do, especially if you're bullish. But when you start getting these divergences like this, then it increases the odds that you're going to get a breakdown of that trend line. So that would be a level to watch right there. If you want to keep it simple, just call it a break below the recent lows. That'll also do the trick. So I'm going to color that line up. I'll color that up yellow. Color this one up yellow. Those are the most significant levels to watch right now. The trend line and about 317 if you want to set a price alert. Let me do that right now. Set alert. And what'll probably happen is these alerts will start going off like popcorn. When one breaks, I'll probably see the rest of these alerts going off around the same time, same day, within a day or so. But they're not there yet. This is the takeaway. You can't get aggressively short right now. The trend is still bullish. We're again within spitting distance of all-time highs in a lot of these stocks. And we could bounce and maybe go on to break that later. Or it could happen today. Maybe by the time I get this video out to you guys, these levels go. Let me continue on here. So there it is again. You can see the recent lows about 317, and so we had a nice uptrend line right there, and there was a sell signal. And that's the story. A lot of these tech stocks, they've already peaked. Market, in the mainstream media hasn't gotten the memo yet. And again, because you can't write it off, of course, with the S&P, going on to make new highs. But these are the market. Make no mistake about it. The FAANGs, Apple, Microsoft, Amazon, Tesla, Facebook, they are the stock market. They're the biggest companies out there, and they have the biggest weighting impact on the indexes. So if they roll over, and I don't want to say it's hard to say they've rolled over. If you want to look at it from the bull perspective, you just say that's high level healthy consolidation before the next leg up. And if it proves to be, then guess what? This market's not going down. But if these were significant tops back in November, and we do break that recent low, the lows of the recent trading range, that's where you're going to see things start to get ugly in the market, or pretty if you're short. It all depends on how you look at things. All right, so next up, Amazon. Level I'd watch. We have a trend line right here, and we've been dancing on it for a while. Lots of reactions on that trend line. Starts all the way back here. I have the first reaction back in September of 2020. Reactions along the way. Dancing on it now. Bigger picture, like everything else, this stock has just been in a go nowhere. Well, slightly higher. It's grinding a slightly higher trading range, like that, kind of like a price channel, but really for the most part stalling out for, over a year now, a year and a half already. And so anyways, that's the level I'd watch right there. Let me see, I don't think there's anything very significant on the 60-minute chart other than that line right there, about 33.14, 33.15. That might do the trick. Tesla, this trend line right here starts back in May. There's an uptrend line. Right now we have what I call an ADH, or almost divergent high. We have a slightly lower low from that previous high. Again, a lot of stocks top back in this one late October, early November, also about a month and a half ago. And you can see that any new high, any marginal new high, as long as it doesn't go up 10, 20%, is guaranteed to be a divergent high. And again, not as if these divergences don't matter. That was back then. We put in a last divergent high on the daily chart there. We were about 905 or so, and this stock fell about 40%. And you might not, it might not look like much on this chart, but again, that's a 40% drop because you're using I'm using log scaling here, and so from there, we put in a divergent low. That was the last positive or bullish divergence, and the stock rallied from that bottom about 140%. So it might not look like much. So that's why I put a lot of weighting into these negative and positive divergences. And so right now we have negative divergence, and that helps to formulate my outlook for the market as well as Tesla. And again, Tesla, I don't have any big levels to watch, any near-term uptrend lines, anything other than that one right there. So it's going to take a little work to get it down there. Facebook put in a divergent high here, and that divergent high so far was a significant top. That was back in September, and or was it? Yeah, or no, actually September 1st. And from there, this stock has already fallen 21%. And recently put in a divergent low here at support. I believe I mentioned at the time being what I said, the best looking of the FAANGs. Because of that, it's the only one that had positive divergence, and it's because it's the only one that already, started its own bear market, down 21% off the top highs, and therefore it had a bounce. But you can see the levels; they're pretty clear on my chart. That's pretty significant, very significant resistance, about 354.80. We'll call it 355. That's been capping all advances recently, and obviously this becomes, and it was before and still is, a significant low. It's about 297 down to about 291. Why is that? Well, you had this trading range back here, multi-month trading range, about a year-long trading range, and then we broke out above it right there. And so this was basically a successful back test of that range, and that's why this one was laid out as a long side trade idea back then. However, unfortunately for Facebook, if the rest of the market leading FAANGs go down, as I suspect they will, it's going to drag it down with a lot of them, the rest of the lot, that is. And so that's the outlook for Facebook. NVIDIA, little trend line right here, and really these recent lows, you want to be safe, wait for those recent lows to get taken out. A lot of hot air under NVIDIA, and a lot of these stocks, guys, I didn't mention it in some of the ones I just covered. Look for the PPO to cross below the zero line. In some cases, like on NVIDIA, I have a line right here at about negative 1.37. That's done the trick. That's usually where the PPO drops. And so when the PPO, and not the PPO itself, the signal line, the white line, the 9 EMA, when it's above that line, it's bullish, and that often acts as support on pullbacks. So that's what you want to see get taken out. You can see the stock also, like almost everything in the Nasdaq 100, peaked back in November and did so with negative divergence. So that's the outlook for that. Let me just see if there's anything else on there. Yeah, I guess I already mentioned. I didn't mention Apple when it peaked or put a near peak recently. It was it had an extreme overbought reading, and that usually you get that divergence off that 80 level on the RSI, and that usually leads to corrections, just like you had back here the last time we had a nice correction in Apple. All right, so covered Microsoft, I covered Amazon. I'm just looking at the indicators, see if I missed anything there. Facebook, NVIDIA, that's the one we were just on. All right, so there's the other share class, Alphabet, ASML. Well, on this one, you might want to watch those 200-day moving averages, which they're just below. And Broadcom, AVGO. This one recently triggered a breakdown or sell signal below that uptrend line right there, along with a bearish crossover on the PPO right there, just like we had back then. Adobe's long since triggered a sell signal and put in a top back here. And again, another one that peaked in November, top holding in the Nasdaq 100. We're still in the top 10, and it's down 25% so far. It's at support right now, and normally I might, if the FAANGs looked better and I wasn't expecting a correction in the market, I'd be looking to go long right here. That's 25%. The stock's lost a quarter of its value, and right back down to this year-long trading range right there. So it's basically a back test of that. But however, I'm not crazy about the indicators, and I'm certainly not crazy about the outlook for the Nasdaq 100 because, again, babies get thrown out with the bathwater. I don't care how good the charts are. If we see forced selling, panic, liquidation, rush for the exits in the market in the Nasdaq 100, it's going to affect Adobe because it again is one of the top holdings in the Nasdaq 100. So you sell the Qs, you go to your broker, you click off a sell order, sell 1,000 shares of QQQ or whatever you sell. they got to sell what's in there. That's effectively what's happening is, the holdings get sold proportionally to their weighting. Cisco. Trend line broken, recent sell signal there, and that comes after a big divergence that's been building for a while, as well as an extreme overbought reading. Last time we were this overbought was right here. You can see what happened there. We fell, or Cisco fell before all said and done, dropped about 16%. Divergence is even bigger now. Same overbought reading. I don't see why we're not going to fall at least that much again. And last but not least, let me just wrap it up here because I could go on and on and on. Netflix. Netflix has this big, again, over a year and a half long trading range right there. It broke out right here. Well, the breakout was there and we back tested it successfully. We're coming back up on it again. So this is where, quote unquote, where the bull should be buying. You're also going to have divergence, and maybe they do. Again, this is a better looking chart, probably the best looking chart so far of all the ones I went over, because you do have potential divergence. So again, this is where the bulls should step in and buy. And if I was, bullish on the equity markets at this point in time, this would be I would be buying this one. It would probably be my top pick again out of all the ones I just covered. However, that's the thing about forced selling. So if the Qs break down and have a correction that I'm talking about that's going to be measured, even from where we're at now, not counting what we've already dropped, but we've got, well into double digits drop coming to 10, 20% or more, which I think is what we're looking at. It's going to be really hard to see Netflix do this with QQQ doing that, again, because of the weightings. All right, I'm going to wrap it up here. I've given you levels to watch, and the way I view it is pretty simple. The more, it's like a criminal case. You're innocent until proven guilty, and the more evidence that the prosecution puts up, against the defendant, the more likely they're going to get convicted. I look at trading the same way. The more evidence I have, I just went over a bunch of levels. If I start getting those price alerts that Apple was breaking down, and then Microsoft breaks support, and Amazon and Tesla, well, that's going to help solidify those sell signals, and it's going to tell me go ahead and add to your short positions, and and watch those levels. If we get a breakdown of all those levels, and then all of a sudden everything snaps back above it, not just briefly, not just a little whipsaw, but a solid move back above, well, then I reduce that short exposure or cover the positions altogether. So, all right, guys, I'm going to get the video out to you, and I'll do updates on anything else that stands out as soon as I get a chance to catch up on the charts. This has been Randy Finney with Right Side of the Chart. Have a great day.